Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is July 26, 2023. It is FOMC rate decision day. The Fed is expected to raise rates by 25 basis points to 5.5%. The market has that as probably the last hike for the year. The Federal Reserve may think differently, and we'll hear of what the Fed Chair Powell has to say at 2:30 when he starts his press conference. So that could lead to some fireworks in the currencies this morning. We'll take a look at the euro versus US dollar from a technical perspective in this report. First off, risk is increased during the Fed decision, and especially one like today's. We know they're going to increase by 25 basis points, but it's the future that the market is more focused on and what the Fed might do or not do going forward. Do they look at the CPI data that we saw last month, which was lower than expectations, and the trend moving to the downside as a prelude to perhaps lower inflation going forward? Or do they look at the employment situation, which remains tight, and look at that as inflation can't come down if that's still so elevated or tight? So that's going to be the decision. The Fed chair speaks at 2:30, and we will hear his comments during that press conference as well. So what are the technicals saying and what levels are in play? Well, first off, the 50% retracement level of the move up from this low to this is the July low to the July high. We fell below that 50% retracement in trading yesterday. That's right here at the 1.10539 level. We tried to stay below that level until the close, actually, and then in the early Asian session, the price continued its move to the downside, but then moved up in the late Asian session, early European session, and the price has been above that 50% retracement since that time. This level is going to be a barometer for bullish above and bearish below through the FOMC rate decision, and much is going to be dependent upon what they say and how the market interprets it. So there's a lot of risk going through that. It's up to you whether you want to trade it. It might be better to just wait for potential extremes or clues from the other technical levers other than the 50% retracement. But that will be our barometer for bullish above and bearish on a move below. Now, technically on the targets or the levels above and below, the 100-hour moving average is going to be another key level that I'm going to be paying attention to after the rate decision. That level currently comes in at 1.10969. If we move above that level, that would increase the bullish bias. Recall from last week's trading, the price moved below that moving average here for the last time. We came up and retested it here before moving to the downside. So with it, the last few days moving to the downside, of course, it's dragged behind and remains above it. But if the price were to move above that level, that would increase the bullish bias for this pair and have traders looking up toward perhaps this level 111.26 and maybe even up to the 200-hour moving average 1.11619. Those would be the next targets on a break of the 100-hour moving average after the rate decision. Now, on the downside, if we break below the 50% retracement level, I have earmarked this swing area through here. Now, the swing area goes back in time to starts over here. We had a swing high here, and then we moved below that level and used that level as resistance, and then moved above it here briefly and found support against it here. So, this yellow area is a level where the market found support buyers yesterday, and if we break below that level, and then the 61.8% retracement, we see further downside momentum with this swing area through here. I'm going to go back in time and show you what the importance of that level. It goes back in time further, but you can see how it was sort of dissecting bearish below here, bullish above here, bearish below here, and then we moved above it, and the last test came right here before the market moved higher. So this area is going to be another level on the downside that if we go below it level, we would expect more selling pressure. So below the 50% comes down to this level, which then comes down to this level right through here, and then I'm going to put it on the arrow here. It makes it easier for me, and then comes down to the 100-day moving average down here, which is also near a swing area. So we know the levels that are in play here for this currency pair. It's just a matter of how the market interprets it after the fact. and we'll use the 50% retracement level as the a barometer for bullish above and bearish below. And as far as the risk goes, that's up to you. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.